The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to this Friday edition of Squawk Box Europe with myself, Steve Sedgwick. We've got Ben Bullos and Karen, of course, live at Vivatech in Paris. These are your headlines. Andy Burnham wins the Makerfield by-election, returning him to Parliament and setting up a leadership challenge against the Prime Minister, Keir Starmer.
There will be no second chance, but it is a chance now, from this result tonight, to build a new politics based on unity and hope.
U.S Iran talks today are called off after Vice President JD Vance cancels his trip to Switzerland as the administration hits back at criticism of the deal from both sides of the aisle.
If the Iranians don't change their behavior, their military and their nuclear program is still destroyed. If they do change their behavior, then they are going to have a transformative relationship with the Middle East. That's a win for the American people and for the President of the United States.
OPEC welcomes an interim agreement between the US and Iran, pushing back on forecasts of a supply glut following the conflict. The Secretary General telling CNBC that OPEC still has the power to manage the market.
We are unified, and our death certificate has been written many times before, and we have emerged stronger than before, and we will emerge strong and continue to be strong.
Not often I say this, but wow, what an evening we had. A day in UK politics yesterday, and we haven't even got to the main event. This is just the hors d'oeuvre. I mean, Andy Burnham absolutely gave a drubbing to Reform and Restore as well. The Tories weren't in it. The Liberal Democrats weren't in it. And I find this absolutely fascinating. The charisma of the man, he's built that up over the years, meant that he got 55% of the vote. That is unheard of, considering that Reform and Restore were supposed to be together quite a force for change from the right wing. But they only got 18,000 votes between them. He got nearly 25,000. And the Tories won in Scotland, and South Aberdeen. I don't want to diminish that as well. So lots going on for all the major parties. I'll fill in the gaps. Labour's Andy Burnham will once again be an MP, setting the stage for a showdown with his Prime Minister in the same party, Sir Keir Starmer, for number 10 Downing Street. Burnham emerged victorious in a by-election in Makerfield in north-west England. Speaking after his victory, Burnham issued a warning for the Labour Party.
We must hear it. We must act upon it, and we must get it right. There will be no second chance. But it is a chance now, from this result tonight, to build a new politics based on unity and hope, turning away from the path that takes us to a divided, dark politics of the kind we see in the United States. We must now take this path and put this country back on the right path and bring people back together and get things working properly again.
Can I just say something about his accent? And I don't mean to be kind of Londonish, in fact, quite the opposite. He said must, he said path. He's got Manchester authenticity, which so many leaders of the Labour Party who are London-based, people don't like. They like the fact that he's this authentic Manchester man of the people, as he's invented himself, the so-called King of the North, as he's invented himself. Let's see what Sterling's doing as well. It's barely moving. It was down a bit in the last couple of sessions, but it's more about the ascendancy of the dollar. So the pound, 131.95, sterling euro, 115.39. So it's really not moving much, is it? Let's have a look at the FTSE futures. Again, they're moving in line with the broader markets as well. So no great panic appearing at the moment anywhere in UK asset classes, despite the fact that people have talked about a gilt rout potentially. But I think it's very interesting. Ritika Gupta joins us before we get to an analyst. Hello, how are you?
Yeah, good.
Did you enjoy looking at it? As an analyst of UK politics, I find it, an amateur analyst of UK politics, I find it quite fascinating.
This is fascinating that this by-election, so hugely consequential now. I mean, you set it up there. Burnham winning big, 25,000 votes. And as you mentioned, there was a lot of concern that he was going to face stiff competition from Reform. But this big win now, I mean, it shows that he does have the potential to take on Nigel Farage's party. But now let's address the elephant in the room, OK? This is what it means for the Prime Minister Keir Starmer. Burnham winning winning, that will make him an MP. Not today, because Parliament's not sitting, but we could expect that next week, giving him a route back to Westminster. And, of course, he's made it no secret that he wants the Prime Minister's job. Now, let's take a listen to some of what he had to say after winning.
It will never be a stepping stone to me, but instead will be my touchstone. A Makerfield test at the heart of British politics will ensure the places Westminster has neglected will now get fairness.
Now, to trigger a leadership contest, he's going to now need the secure nominations for about 81 Labour MPs, so about 20% of the Labour Party, and then win the wider Labour membership and get that vote. He's got a lot of support from those grassroots members. Now, how quick this happens, though, that all depends on how Starmer reacts to this, if he voluntarily resigns. Now, he's been steadfast in saying that he's not going to quit as a Labour leader. This makes it more complicated, makes it a more drawn-out process. However, what we could start to see is some mass resignations to try to force Starmer to step down. The Daily Mail's been reporting that Ed Miliband...
Daily Mail, that well-known centre-left newspaper.
Yeah, they're reporting that Ed Miliband will resign next week as part of a coordinated coup if Starmer refuses to step aside. The Guardian reporting that Burnham is asking them not to step down this weekend, to give it 72 hours, aligning from when he could be an MP. Now, you mentioned coming into this, the market reaction. We haven't seen a lot of that this morning. I spoke to Callum Pickering of Peel Hunt. We know him well. He said a lot of that action has already been priced in. Going forward, it's going to be, though, about the future policies, the autumn budget, and you know, of course, who he's going to announce as Chancellor if, again, he is the Prime Minister.
The continuity candidate. Let's get to Matthew Ryan, who is Head of Market Strategy at Ebury. Good to see you, Matthew. I'm going to hold my hands up. I did not see Burnham winning by such a large margin against the right-wing threat. Bearing in mind, in Gorton and Denton, it was the Greens who Hannah Spencer got into Parliament, and Labour got a thrashing. So this is a by-election, by the way, for our international viewers, that we had back in February. The preferred candidate of Keir Starmer, the Labour Party then, got a thrashing. Whereas this time round, the non-preferred candidate, who is the great rival, did it stunningly well as well. I find it quite extraordinary what happened last night, but more importantly, what do you think?
Yeah, I agree. I mean, I think this is a real turn up for the books, just how comfortable this victory was for Burnham, because we look at the polls leading up to the by-election, they were relatively close, and I think the market was largely pricing in that Burnham would win, but it was not fully pricing in. It was still a little bit of uncertainty as to the outcome. Clearly a very comfortable win, and that gives Burnham potentially a very, very strong mandate, were he to become Prime Minister, to maybe go to or force through some of his more extreme policies.
Now, I mentioned I'm an amateur analyst at this, even though I've been studying this for most of my life as well. The fact of the matter is, I don't see the point in members of the current government, maybe Miliband, maybe Streeting, maybe Rayner, who was part of the current government until relatively recently. I don't almost see the point in them standing against the man who's just won 55% of the electorate against the odds as well. I can't see a route in which he doesn't become the next Prime Minister. This is not me being politically biased, it's just me looking at this analytically. Yeah, no, we've been saying that for some time. We saw this as effectively a binary gating event for Burnham, winning Makerfield, and his path to number 10 is pretty clear. It seems as though he's got more than enough support among Labour MPs in order to trigger the leadership contest, and then Labour members in order to win that said contest. So this really was, we thought, the biggest hurdle for Andy Burnham. He's passed that with flying colours. I agree. I don't think that we'll see actually any of the other candidates run in that leadership contest, because that would be a little bit maybe political suicide. You do wonder whether they're maybe potentially positioning themselves for a position on Burnham's cabinet. I think that's far more likely. Yeah.
But in terms of the market reaction, Matthew, you mentioned a couple of times now there's been little market reaction today. Burnham has walked back some of his comments that were more unsettling to the market previously. He's now saying that we do need to focus on the bond markets. We shouldn't be. He doesn't want to break the fiscal rules. So is it not going to be as bad maybe as the markets had previously predicted, having him as the Prime Minister? Or what's your take on that going forward, looking at what the future policies might be, and how much of this rests on, I guess, who his Chancellor is?
Yeah, well, let's see. I mean, I think we think the market's been a little bit complacent heading into this by-election. Actually, the reaction that we've seen in sterling and gilts has been pretty minimal. We've seen a bit of downside in the pound, obviously, this week, but a lot of that, well, almost all of it has to do with what we're seeing in the US, particularly the hawkish Fed announcement. But we do see some more downside in UK assets. Should it become clear that Burnham's going to be the next Prime Minister, should it become clear that he's going to pursue maybe some of his policies are more to the left of what we're seeing from Keir Starmer, whether that be high government spending, an increase in the tax burden. He's recently or previously suggested that he could be in favour of raising income tax rates. And then the biggest concern for markets is possible higher gilt issuance in order to fund this spending. That's going to be something that markets are very concerned about, I think, in the next few weeks.
So what should investors be watching out for then, I guess, over the next few months? And what do you think of the autumn budget? Is that going to be the next major test, I guess, for the markets?
Yes, absolutely. I mean, it's all about what kind of policies that Burnham will pursue when in power, which looks very likely. Will he go to some of the more extreme policies, greater government spending, maybe higher income tax rates, and then what he does with borrowing is going to be very important. As I said, we think the markets at the moment are underestimating this risk. We do see some more downside in UK assets. Should he pursue some of these more extreme policies, because there's very little fiscal headroom, there's very little wiggle room for the government at the moment, and if Burnham were to test some of these fiscal rules, maybe put some of them in jeopardy, then certainly we do see some downside in UK assets.
In terms of where the government goes in its positioning, further to the left, status quo and so on, your research paper highlights the different kind of, I suppose, positions it could end up in. If, with the odds-on favourite being Andy Burnham emerging victorious, if there is a leadership challenge, which we fully expect there will be, what are you anticipating that will mean for the markets? I mean, he has rode back on some of, I suppose, his harder left comments about not being in hop to the bond markets, and then clarified and said, no, we must take a notice of them. Has some of that concern eased now or not?
I think so. I mean, his recent comments, he's dialed back that famous line now about not wanting to be in hop with the bond markets, but investors are still very much wary of that. I mean, these comments were not from all that long ago. Actually, it was less than a year ago, and the proof will be in the pudding. Actually, whether or not he does abide by the fiscal rules, or whether he's pursuing some of those more extreme policies. In the near term, I think the immediate concern for markets will be whether or not we see an immediate change in leadership, or whether this is a drawn-out process. I think if we were to see maybe a possibility of a prolonged leadership battle, that could be the most immediate concern for markets. If Keir Starmer digs his heels in, refuses to resign, that could be a big concern, because markets don't like uncertainty. They don't like being in limbo. And any possibility that we see a protracted leadership contest, that could be a concern for investors.
And just to get your thoughts on sort of the other big monetary situation for the UK, the Bank of England and its decision, what was your takeaway from that?
Yes, largely as expected, a 7-2 vote, which was in line with the consensus and in line with our view. The Bank of England clearly keeping its options open. It is signalled in its communications that it could raise rates should it see second round inflation effects, but we don't necessarily think that those will come to pass. Actually, if you look at particularly the UK labour market is very weak at the moment. We don't think that those second round effects will necessarily be significant. The war in Iran is obviously ending, which should ease pressure on the Bank of England to hike. So we're more of the view that rates will be held at current levels for the foreseeable future, and then maybe we see cuts next year, of course dependent on inflation and on the growth outlook.
Are we talking ourselves into being too pessimistic about UK equities? I mean, if we slightly ignore the politics, the fact of the matter is you've got some amazing world-beating companies in the 100 for a start, who are trading on international markets, who have international revenues, who are trading at London prices at a discount to their counterparts elsewhere. The FTSE's 6-7% away from its record high as well. Are we talking ourselves into being downbeat about UK equities again, when actually we should be quite excited about the opportunity at this level? Perhaps.
I mean, I think the outlook globally is not too downbeat. Obviously, the end to the war in Iran is pretty significant development for financial markets everywhere. That should provide some relief to investors, should be good for sentiment. As far as the UK is concerned, we're still looking at the state of the UK economy, growth still fairly weak. I don't think the outlook is overly favourable, and particularly because of the labour market. We're seeing some pretty weak data there.
Well, no, but people are still, do you know, once, about a quarter of a century ago, early in my days at CNBC, I was like, the UK consumer's under pressure, they're worried about their jobs, they're worried about, they're not going to spend any money. And I think it was Geoffrey Dix, who was then at, I think, Royal Bank of Scotland, he said, don't be ridiculous, never underestimate the UK consumer. Matthew, look at this. Look at this, everyone. UK retail sales on the month were expected up 0.5%. They're up 1.2%. They're flying the Union Jack, they're running to the stores. Retail sales year on year expected up 1.9%. Up 3.2% as well. Ex-fuel is not even about the extra fuel. 4.6% as opposed to seen up 3.3%. I'm just breaking the numbers as we see them. The UK consumer will spend regardless. They will keep the UK economy going, won't they, Matthew?
Well, let's hope so. I mean, I think a lot will depend on inflation developments in particular, what happens with energy markets. As I said, the news on Iran has been positive. Hopefully that means that inflationary pressures will be slightly more subdued in the second half of the year. And you're quite right. I mean, if that comes to pass, and we could see a slightly more robust performance in the UK economy. We're still looking at the labour market. I know the data recently was slightly more upbeat, but the overall picture has been pretty underwhelming. Unemployment is still relatively high, and we think that should feed its way through into a subdued performance in the UK economy. We're not exactly expecting gangbusters growth anytime soon.
Very good. Matthew, lovely to see you. Thank you very much indeed for that. Matthew Ryan, Head of Market Strategy at Ebury. Are you coming back?
I am, at 8:30.
Very nice. Lovely to see you. Thank you for setting us up nicely with that one as well. Ben, what's going on?
Yeah, we're coming back after a short break, and stay with us because we've got this. The U.S. Iran MOU gets off to, well, a shaky start with Vice President JD Vance cancelling a trip to Switzerland. Also ahead, we'll have more on Andy Burnham's by-election victory and what it could mean for UK Prime Minister Keir Starmer. We got that throughout the morning. And OPEC Secretary General welcomes an interim agreement between the US and Iran, pushing back on forecasts of a supply glut following the conflict. We'll bring you Dan's exclusive interview after the break.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. US Vice President JD Vance's trip to meet Iranian negotiators in Switzerland has been cancelled. A White House spokesperson said the US delegation had been prepared to depart, quote, at the first available opportunity, but logistics of the talks have never been simple or predictable. Iran cast doubt on the need for a formal signing of the Memorandum of Understanding after the agreement was inked by the presidents of both countries on Wednesday. Speaking at the White House, Vance looked to frame the MOU as a win for Washington.
The part of this MOU that I think have been most misrepresented by certain parts of the media is the idea that the Iranians get all these benefits. You will hear things about $300 billion or $24 billion or this or that number of money or amount of money. And the simple fact is that the only way the Iranians get any of those resources, not a single penny, by the way, from the United States of America under any circumstances, but the only way that they would ever get any benefit of the bargain is if they comply fully and change their behavior. And so you really have a win-win situation for the United States of America. If the Iranians don't change their behavior, their military and their nuclear program is still destroyed. If they do change their behavior, then they are going to have a transformative relationship with the Middle East, and the Middle East will have a transformative relationship with the people of Iran. That's a win for the American people and for the President of the United States, regardless of which option the Iranians ultimately choose. We obviously want them to choose the right option.
Well, US Central Command confirmed the blockade on Iranian ports has been lifted following the signing of that MOU, but said ships will remain in the general area. Iran's supreme leader also weighed in on the agreement, saying US President Donald Trump made a deal, quote, out of desperation.
It's going to go on, isn't it? OK, OPEC Secretary General has dismissed IEA forecasts of a supply glut in the oil market following the Iran war. Haitham Al Ghais, who reiterated to our very own Dan in an exclusive interview following the release of the group's flagship World Oil Outlook, that he does not see peak demand on the horizon. Oh, Dan, this is absolutely fascinating as well. And of course, we know the IEA comes at it from a consumer point of view and OPEC comes at it from a producer point of view. So they're always going to have that tension, even when it isn't turned up to full, as it has been recently. But what I think was also fascinating in your interview is the comments about supply gluts in the medium to short term as well, because we know an awful lot of oil producers are going to be full tilt to get their product back onto the market, and less of them now are going to be members of OPEC.
That's right, Steve. And it's been so interesting to parse some of the analysis here, particularly given the shock that the energy market has just been through as a result of 4 months of conflict in the Middle East. The blockage of the Strait of Hormuz, millions of barrels being locked offline, the massive decline that we've seen in inventories as well, all weighing on a market that is still in this moment right now attempting to price what could potentially happen next. Just quickly on the Vice President's decision to cancel this trip to Switzerland, quite significant news here, but perhaps too soon to say whether or not this actually signifies this MOU getting off the rails, so to speak. The Iranians have suggested that perhaps we could see a pause here because, of course, Israel has kept up its own strikes in southern Lebanon. That might be part of the reason that the Vice President decided not to push forward with this signing ceremony. But at the same time as well, the US also suggesting that what we have seen here is the deal already being signed electronically. So perhaps this doesn't matter so much. We're watching and waiting to see exactly which way this goes over the next 60 days. As for the oil market, we've seen prices come down significantly on the reopening of the Strait of Hormuz, a really significant development that was also welcomed by the OPEC Secretary General in our conversation here late yesterday. And I also asked him about the IEA projections for a supply surplus into 2027. OPEC's own World Oil Outlook report, this very closely watched document that gives us insight and analysis into the long-term projections for oil supply and demand all the way out to 2050, suggests that demand is not going to cool down anytime soon. In fact, OPEC sees demand rising every year out to 2050, and at the same time as well, saying that no peak demand is on the way either. Here's part of our conversation. Listen in.
We're going to require a lot more investment in the oil industry. 17.7 to be exact, almost $18 trillion. That's nearly 700 billion plus per year in the upstream industry, in the downstream refining. You heard today the analysts talking about a shortage looming on refining, especially in the Atlantic Basin. And of course, in logistics and pipelines and other infrastructure and so forth.
An extraordinary amount of capacity has to be installed to meet that demand. And you and I have spoken many times in the past about the need for investment in this industry. When you look at the situation more short term, though, and comparing with some of the other forecasts that are out there, the IEA was also out with a report this week that said we're on track for heavy oversupply by 2027. Can you react to that? And what does OPEC see that the IEA does not?
Well, I think the question should be, what does the IEA see that OPEC and the rest don't see? That's my first reaction. My second reaction would be that we have heard this before, since you mentioned the IEA, with all due respect. And again, I go back to us focusing on fundamentals and not putting many ifs and buts in our forecasts, but rather focusing on actual numbers. And again, we're not about making a big headline. We're not about making a fancy headline that will be catchy. Really, I think sometimes it's best not to make such assumptions, because such assumptions, when they are not really based on actual facts and figures, and just based on an assumption of an if this happens, this will happen. But if that doesn't happen, then this may happen. I think what people don't read is that fine print. They only read the headline behind it, and that headline could be misleading. ultimately these headlines only create more volatility. So again, I think I don't want to comment about what the IEA sees or not. We read the reports, obviously. My team briefs me on them, but I think we do it in a different way, and I prefer our way.
Your Excellency, before I wrap up our conversation, I also wanted to ask you to cast your mind forward as well. It would seem that no one really expected this war in the region, Hormuz to be closed for so long, so many barrels to be locked out of the market, direct attacks on Gulf energy infrastructure. When you cast your mind forward, what do you think that we should be looking out for? And what do you think that this market might be mispricing or perhaps misunderstanding the most?
It's a good question. I think I'm not going to talk about pricing. We don't comment on prices, but I think people underestimate the resilience of this market. I've said this before. How the markets reacted during COVID, for example, is a classic example. I think the markets now leaned a lot on the Saudi pipeline, East-West pipeline, the UAE pipeline, storage abroad, and Chinese demand. People were talking about Chinese demand collapsing, but actually it is not collapsing. The demand is there. It's just that China tapped into some of the reserves they have built up over the past.
Secretary General speaking to me here at OPEC headquarters late yesterday. And with regards to what other analysts are saying about the outlook right now, the verdict on this Iran MOU is still very mixed at this point. I spoke with Bob McNally at Rapid On Energy late yesterday. He called this a ransom payment that the United States is essentially paying to Iran here in order to end the war, reopen Hormuz, and avoid an economic calamity through the summer that would have resulted in higher prices. And those around the president have also suggested that it all comes back to the economy here, the U.S. ultimately paying that price in order to bring this conflict to a close. On the Strait of Hormuz as well, I spoke with Amrita Sen at Energy Aspects. She said that we still don't know what type of control Iran might try to exert over the Strait of Hormuz moving forward. On this question of tolls, we still don't know what the mechanism is going to look like after this 60-day period. And I also spoke with David Fife at Argus Media, who suggested that we may also not know exactly when Hormuz flows could normalize as well. So the oil market really attempting to price what is still a really volatile situation and a lot of unknowns as we navigate our way through the next 60 days.
Great work, Dan. Thank you very much indeed for that. And for more on Dan's conversation with the OPEC Secretary General, head over to CNBC.com to watch the full interview. Russia has vowed to retaliate after Ukrainian drones hit several locations across Moscow, setting a major oil refinery on fire and forcing evacuations at the country's largest airport. The attack was Kyiv's biggest air raid on the city since the start of Russia's full-scale invasion. The refinery is one of Russia's largest, accounting for more than a third of the fuel market in the region.